So we'll talk about the budgeting feature within GL, and what all there is and how we can set up the budgeting, and based on which we do the how we check for funds and do a analysis of how much was budgeted and how much has been spent, and tracking all the expenses and stuff like that. So typically budgeting is done against either the top items that are frequently being uh, expensed
We lost you, Saurabh.
options, the top items, if not all,
Saurabh, we
by
lost you for a while. We
hello.
lost you for a while. We could not hear that.
When?
Just few seconds back.
Which one?
When you started budgeting,
Okay. So budgeting is basically the process of you would record what you want to spend in a financial year, and against that you would be tracking how much you have spent, and take ensure that the objective being that you stay within the target, so that you are able to achieve the particular numbers. Okay, that has been the target for which has been set by the company. So in our case we'll be talking about how we do the budgeting, and what are the different ways in which the data integrates with other pieces of the fusion puzzle. Okay, so we'll start with how we create budgets, how preparations are what kind of preparations are required for defining budgets in the system, and what are the different ways in which the information is collected and reviewed through the application. So in this particular you know topic, we'll be looking at what are the ways in which the data is tracked and maintained in the application, so that we are able to track all the information in our system. So let's start with the topic on, and we'll see how we um, do all of this in the system. Okay. Now, when it comes to preparing some of the data that we need for budgeting is in systems like Hyperion. Okay. So now Hyperion is something which is now tightly integrated with Fusion, and so the data based on which you will be generating your budgets. Okay, so that means you need to know, to define a budget you need to know how much you have spent maybe over the past year or over the past 2 years, based on which you can arrive at a more accurate budget and do an estimate of how much you are going to spend in the current financial year. Because it is not enough to define a total or a budget it's very easy to set a number, but it is very difficult to give an accurate estimation. So the challenge in budgeting, the main challenge in budgeting is setting up a target. You know what you are going to spend, because you are forecasting the future. So if in the next year you are going to see that you are going to define the budget for any item, let's say employee welfare or travel or conveyances, local expenses, entertainment expenses, how do you set a realistic budget is a challenge. So for that, in terms of budget preparation, we need to get the actual data, okay, loaded into the system, or made available from the system, which can help us to get our accurate budget data. So what are the different ways in which you can get the data? One of them is you can do budgeting with uh, budget preparation rather. Hyperion data. Okay. You can also import data using a flat file, or import budget data through a spreadsheet and import from. For budget preparation, that okay. So typically the data that you need, different calculations that you do, like what is the expenses done during the past year, maybe year or the year before, or past 3 years, what has been the average, or what has been the trend? Is it rising 10%? Is it rising 20%? On top of that, you see, you know, how much of additional expenses, effort you are trying to put in, based on which you can try and get a more accurate, okay, uh, budget figure. So that's the whole objective, to try and get a accurate figure for our budgeting process.
Yes, sir, I have a question.
Yeah,
This budgeting is at the legal entity level or a business unit level?
this is more at the ledger level.
Ledger level.
Ledger.
So, okay, ledger again it ties up to legal entity level, right? Hello.
Identified how you're going to be doing the budgeting. The other thing that you need to define as far as your budgeting is concerned is what we call as the dimensions. Define dimensions. Define budget scenario So this will, using the budget scenario dimension, what you will be doing is you will be defining what are the different aspects of budget scenarios that you are going to tackle, okay, in this particular solutioning. So we define or we specify as many budget scenarios as needed for every business plan, okay, in order to track the budget balance. The objective is to track the budget balance. So are you going to do, 2 year, 3 year data? Are you going to look at, the past year, whatever you have spent plus 10%? Are you going to enhance it by 20%? Or you're going to take the average over the last 5 years and then try and see how you are doing against those in terms of the revenue, sales, or budget expenses. And these are different aspects that you need to be trying to create and map. The other thing that you need to do is define the budget versions. Okay, so we define the budget versions.
What exactly is the dimension?
Dimension is basically a scenario. And then we can share the budget scenarios between the ledgers. So if you have, more than one ledger for which you will be tracking your budgets, you can then, once you have defined one scenario, you can share them across multiple ledgers. So if we look at how we are going to be importing the data, for, as far as your budget, loading of the budget into the system is concerned, you have the spreadsheet which you can use for loading up your budgets, right? And even the text file, you can put it in a text file and import the budget. You can also import it from the different other solutions like Hyperion or SmartView. Okay, based on that, you would then be defining the different aspects of the budget scenario. So that would be your budget against which you would be tracking your actuals. Okay, so let's define a small budget, okay, which we can try and then see if we can import it into the application. So the first step that we'll do is we will create a budget and we'll add it to the different accounting scenarios that we can define. Okay, so each budget that you are going to be defining in the system will act as a scenario for tracking your budget. Okay, so you could have a budget for financials, or you could have a budget for particular business unit, for a particular legal entity, tracking different account heads or different combinations of account heads, based on which we will be calling them as scenarios. So for each budget you need to ensure that it is in part of our, we'll first add it as a value and then we will be tracking the scenarios from there. So for that we will first go to the financials. We'll go to the value sets. So we have a accounting scenario. This is a lookup, a value set. So it will be a list of values. So within that, you need to add your own value, saying that this is what we are going to be having. So you will find, budget, forecast, and things like that. So you can add your own scenario to this. Now we will have the, we'll need to run a particular process, which is the create scenario. So this is for creating the, we can say, scenario. Create scenario dimension members. So this is something that will happen as far as the automatic process is concerned. It will add our scenario member to the uh, program. Okay. And next, we'll see how we can upload a budget. So for that, we will go into our financial journals, general accounting journals. Okay, and we are already accessing the US primary ledger. So there is a section here which talks about the budgeting. Oh, budgeting is not enabled. So here there will be an option for creating budgets. Okay, let's go. Let's go and check if the budgeting option on that is enabled or not. We'll have to, I'm just checking for the profile options. Manage general ledger profile options. This is the one which will allow budget upload. So this is enabled. Okay. On the general accounting dashboard also you can go and check here. So here you have this create budgets. Okay. Planning and budgeting, create budgets in spreadsheet. Okay. So when you click on this, a spreadsheet will open up, create budgets. So this is just like any other ADF spreadsheet that we have been looking at, where you can go in and define your um, numbers in the spreadsheet and then submit that and upload it into the application. So here you will have to specify, the different values here. So run name is, we are creating a budget. So let's say SP budget, and so you will find this, what type of, see, we had that value that we added. So this is the value that we get from the drop down. We added in the value set. So that is what you will see here. Which ledger it pertains to, we are going to put it in the US primary ledger. Which budgeting year accounting period that it belongs to. Let's say we do it for Jan of this year, and obviously the company values will be there. You put in the different line values, the combination of, for which you are going to be budgeting. Currency USD, and budget amount you can put as per your need. Okay, or you could put another zero. If it sounds very low, you can add a higher amount as well. Okay. Let me just double check these values. So company is 101 10, account 51510. 51, only one is there. 51. Okay. Now the same kind of budget the values that you, right. So maybe for every month you want to have multiple, for every month you'll be having Jan, Feb, March, April, May, June, July, August, September, October, November, December. Uh, okay, so these are the values. The amount and the account can remain the same. So you have, so these are the different months for which you are putting in the figures. Okay, and maybe month wise you want to give an increment of every month you want to increase it by 10%. So you could have like this one, it's 100,000.
We lost you, Saurabh. We can't hear anything.
You can't hear me.
No, okay, but we lost you for a while now.
So let's say 125, then 140, 155. Okay, now once this is done, you need to submit this. So if there are any errors in your import of the budget, then you can come and check here whether there are any records. So you have the different runs. So if you remember, we had given a name of SP. You need to check whether that is in the list here or not. So it's not here. Okay, you see this. So based on this, you need, how this works is you choose one value here, and then based on this click on search. So whatever rows and whatever issues there are, it will be displayed over here. Account has parent values, can only have detailed values. So similarly, it has rejected it for all of them because the parent values have been used instead of the child values. Okay. So if you see here, there are different budget numbers based on which the data has been, it has tried to populate. For every account, there is a different combination. For every month, this is same month, January, but the accounts or the cost centers could be different. So for every unique combination, you would be generating your budget numbers. Okay, so in this way you would be entering not only for January, as you can see, January, so many accounts. After this, February, then March, then April. Maybe for every month you would be having 10, 20, 50 accounts which you are going to be budgeting, or you may be doing for all expense accounts. So depending on your scenario, you would be updating it in the system. So next we'll be going into the budgetary control. See, in this particular one, this is the account combination. So it says what is the budget and what is the consumption. Okay, and the difference of this is the amount that is available for expenses for the particular period or for the particular account. In this case, fund department account, these are the GL segments. So with these GL segments have a budget of this much, where the consumption is going to be this much. So let's say if you look at this budget, then there is a further breakdown based on the account. For every account, what is the total budget, okay, and how is it being consumed? Consume meaning what are the commitments, what are the obligations, other consumptions, expenditures. All these are to be taken into account when looking at your budget consumption. Okay, where are we consuming the budget? So if you want to look at the breakup, okay, so there is a reserved transaction quantity that has been put into it. So what transaction has caused it? You can go and look at the transaction. So this comes from the procurement. Okay, these are the lines. Okay, based on which that particular amount has been reserved. Fund status now is reserved. So this will be taken away from the budget and the remaining amount would be made available, saying that this is what has been done. So this is the purchase order number. Okay. So when we are talking about this obligation, okay, so as you can see, balance type is obligation. So that is typically derived from your purchase orders. You could have a commitment also. Okay, commitment could come from the, you know, again from the project side, where we have upfront, we have some figures for, you know, with the supplier we have made a commitment to pick up so much of stuff every year. Okay, and those are tracked here. And other consumptions, expenditures, these are typically from your other places, like 581 in this particular case. If you go in, you will find it is, and click the transaction number, and this is the lines. Okay, this is the supplier side, this is coming from the supplier's invoice. Okay, so you have the breakup of the line from where you have put a reserve on that particular fund. Okay.
So when you say it is reserved, it is in a manually we are changing the status to reserved, or it is waiting for some action to be happen on procurement side.
Yes. What happens here is the why we do this kind of thing is to ensure that you have adequate funds when the purchase order comes up for payment through the invoice. Okay, so it might happen, or it should not happen, that you have a budget of $100 and you have ended up spending, committing $200. So what will happen is, you know, you won't be able to pay it. So the objective of this process is to ensure that you stay within $100. Moment you raise a purchase order, that is like a reservation of funds can be put. You can say reserve funds, check funds, or reserve funds, based on which system will immediately put a block on that fund from your
But
budget
this is
amount.
not integrated with the procurement, right?
No, this will be, this is,
Okay,
this
so
is.
any transaction happens in procurement side and we
Hmm,
raise a PO, but we are not paid the PO.
correct.
We raise a PO of $1,000. That
Yes.
entry will come and fall here.
Yes. That is why it is showing you that entry, figure. Na? See this one, which we saw that transaction. Na? The transaction was for your PO. So if you see this here, or this figure, let's look at this. So this is one single transaction that has happened. It tells you this is your purchase order. So you're buying supplies worth so much. That is the whole objective of enabling the budgeting. Okay. Now, to review this in this manner, so much of data, so much of details that you are having. So this was the budget amount that we saw. This is the consumption. How is the consumption happening? Right? So to enable this, first we have to set up a control budget. Okay. So control budget is something that needs to be set up at the setup level, based on which we'll go and we'll define the budget. these are the different ledgers. So based on which we'll review our one, which was we were looking at the US. And within the US, you have the different business units. So let's look at the one for US one business unit. Okay, so at the ledger level, do you want to enable budgetary control for the ledger and all journal sources and categories? Do you want to enable encumbrance accounting? And the budgetary controls at the US fund business level, are you going to enable it or not? For this one, it's not enabled. Okay. All of these are no. If you look at the one for university, see for the
So when
university
you
level,
say,
it is
sort of I have
set
a question
at
here.
yes.
When you say
Okay,
budgetary controlled enabled is no, in a sense, we do not have any control measure for that budget.
correct. Or we do not have budgeting enabled at all.
Okay, what about the encumbrance accounting in the sense?
That also is not enabled.
No,
We saw for
what do you
that.
mean? What do you mean by that?
Oh, what do you mean? What do you mean is basically it will enter your entries, it will generate accounting entries every time these kind of reservations, fund reservations are done. Okay, and those accounting entries would be generated by the system.
Okay.
And this is your the budgetary control uh, settings, and this is the manage control budget. So these are the individual budgets that you're going to be setting. Okay, so this is individual budgets that you are having, and you will specify what do you need for a particular budget, from what period to what period, which ledger, or it could be against a particular project also, in case you want to enable it at the project level. So have a look at this definition. From the left hand side, you have the name, description, budget calendar, from which period to which period, what is the source budget type, what is the name of the budget, do you release the budget for consumption, when do you want to release it, immediately, currency, what is the default rate type in case you have foreign currencies, control levels. Okay, you have different control levels here. Advisory means it is just advising you. Okay, it will not do any prevention. And if it is absolute, it means unless the fund is there, you will not be able to do anything against that particular account. And then you have tracking. So in that tracking, system will check and update regularly whether this is funds are available or not, and any changes and all those will be updated, will be informed. Tolerance percentages, tolerance amounts, these are the differences. You know, if you go, if your budget is 10,000 and you set a tolerance of 10%, you can go up to 110. Okay, what is the name of the ledger for which project, who is the budget manager? Okay, so you could look at her details also, Laura Brighton. So that person is the budget manager. And whether you want to allow budget increase adjustments, budget decrease adjustments as you go ahead with the budget. Might happen as you proceed, you realize you had under budgeted or you had over budgeted. You might like to remove some budgets from some accounts and put it into some other accounts where it is being heavily used, right? So you, in case you have the flexibility to do that, allow budget decrease adjustments below funds available. Okay, so these are checks that you can have in the system. And on this side you have the segments against which you are going to be enabling from your um, budget structure. Okay, your chart of accounts, override rules, any changes, what is your maximum override? You can go maximum when you are changing the override, you can go a max of 100,000. So although in the amount it has been defined as 10,000, I think there is some kind of a mistake. It should have gone up to 100,000, and it can go up to 100,000 for invoices. Okay, and then you have the supplemental rules. So what is the department description and the details? Okay, so for what kind of, if you look at this, it will tell you for this particular combination of department values. So what are the transition, what are you going to be enabling for your budgeting? Okay, what is the source? Okay, so these are the sources for which it is being enabled, basically everything. Journal category also, everything. Natural account types, receiving destination type. Okay, so under which heading it is going to be going? Business function, requisitioning, procurement, expense management, receiving, payables. At all these levels you will be having the tracking of your budgets. Okay, so there we were seeing the commitment, obligation, right? This is where the translation into business function, you can say.
So where are you defining the supplemental rules?
These are the supplemental rules with the attribute. These are basically the filters. So what happens here is when you are defining, when you define your budget for the first time, against that you will have to scroll down, come to rules, and then you have to select from here. Okay, from this you can identify the ones that you want to define over here. Okay, based on which, see, you have this plus sign here, so you can create, and from the drop down you can pick up the ones, put in how much tolerances you want for each of them. So basically these have to be defined just like we saw this one, the control budget. This is the budget. So if you want to,
We lost you, Saurabh. We can't hear anything.
not be able to make changes to it. You can only increase, decrease. All of these are these budgets are in use. Okay, all of them are being used. So these are the ways in which you can define the definition of your budget. Okay, now after you have defined the budget, then you can define the access for different users and any encumbrance related accounting. In case you decide to enable encumbrance accounting, in that case you could have this enabled. Most of them are no. So for which category of sources, what is the, at what level do you want to define it? This is at the ledger and or the project level. So this is where you have projects implemented, where you are tracking against individual projects. That is where you will be defining it. Budgetary control, are there any exceptions? So these would be the exception scenarios which will not have encumbrances enabled. Then for the business unit level, but do you want to enable the budgetary control? Okay. If you want to enable, then what are the business functions at which
We lost you, Saurabh, again. Saurabh,
so when and what
Saurabh,
is
we
the
lost you again
reservation
and again.
funds? It is subject to approval. Sorry.
We lost you. We're repeatedly losing you again and again. There's a lot of disconnect in the voice.
Is this happening, Amit, for you also? Santosh, do you want to check your side? Because here I haven't done any, I haven't, done any changes.
No, probably because of the internet fluctuation.
Because it didn't cut off also in between. Uh, okay. So basically, I was explaining this budgetary control, okay, and how you can enable for a particular encumbrance accounting. Basically, sorry, this was the encumbrance accounting, and what are the sources which are exceptions for which you will not do it. Exceptions is for which you will not do it, and these are at the business unit level.
What does it mean, the exceptions?
Exceptions means you don't need encumbrance accounting for these sources.
No, I lost you again. I can't hear you. Hello?
Yeah.
I lost you again. When you're trying to explain those exceptions, I lost you.
Uh, why is this happening repeatedly? I think there is fluctuation at your end, Santosh.
No, it will go for the complete mute. I can see all the videos and all. I can see you scrolling everything on the screen, but not the voice.
Yeah, so probably in between your internet, maybe, because here nothing is happening, and it usually gives a message saying that your session is, if there is a problem. You're using a headset,
No, I'm using the wired headset,
wired headset.
not the Bluetooth. No, wired headset.
Wired headset should be good. USB one or without USB?
No, the regular adapter.
Regular adapter, round pin.
Yes.
Oh.
And in the budget, do they also, when they define the budget, I'm sure that they should have also a contingency amount also, right? Will it be included in the budget creation? Because
Actually,
what, why I'm saying this is you might have defined budget expecting there are around and 25 normal transactions happens in the year with the market fluctuations. I think you might have defined some $100,000 of some amount, but there is an unknown expense arrives. Okay, probably which deviate your 20% of your budgeted amount. In that case, how do they manage?
so in that previous one, when we were defining that budgetary control, there are two things here. One, you can have a tolerance which allows you to exceed up to that tolerance level. So you say that, okay, up to 15% or up to 25%, I'm going to allow. The other option that you have is whether you want to allow changes to your budgets. through adjustments. That can also be both ways. You can increase the budget, you can decrease the budget also.
But even for increase the allow budget increase adjustments, there is a limit set, right?
At this level,
Because
they
because
haven't set any budget. Huh.
typically what happens in the project, for example, when you're not controlling the budget at all sometimes, or they might have overlook the controlling the budget, the expenditures may increase exponentially. Okay, till you create some checkpoints, and it might have overshot the budget around by sometimes 30-40%. In that case, but since we already utilized, we need to approve, or we need to create an additional funds. Do we create any additional funds in such cases?
In that case, that will be, if you know how much amount you already have to do, you have to go in and do an adjustment to your budget.
Okay. I need to do adjustment to the budget, correct? Okay. So do you get any sort of report in this budgeting?
Yeah,
Do you
actually
have
that
reporting?
online budgeting is there. Besides that, you
Okay.
have different budgeting tools, and like if they're doing in Hyperion or they are using smart views, those are the places where they can generate their reports.
So that's in real-time integration, or how it is?
Yes, now it is real-time integration.
So we should buy that offering also,
Yeah.
or separate license.
Correct. Okay. So we saw the budget and the manage control budget, encumbrance, and this is the budget calendars that you have. So this is just like almost like the accounting calendar. The same accounting calendar, you can say whether budgetary control, whether it is to be used only for budgetary control or not. So then it will not be available for accounting purposes.
So when you speak about a calendar, for example, you might have created a budget for entire year, right? Entire year. In that case, any unused fund, how do they manage?
Unused fund has to be done manually.
It will go to what type of account? Say I have $10,000, I used only $8,000. The remaining 2,000 at the end of the calendar year, how are we going to, where are we going to put that amount? Which account? Which type of account?
It will remain against whichever account you are budgeting.
Okay. Okay. So in the next year, it will when we create the same budget, that will get carry forward, or it will be
No, it
how?
will not be. That will be again a new budget that you are creating.
Okay, this they will not accumulate
No,
from the previous year.
no.
So unused fund is gone. In the sense,
Correct.
we're not going to use it for the next year.
Correct.
Probably it may give an insight for them. They're saying that we have to cut down this budget for this year, and we have to use
Basically,
so.
yeah, basically most companies, they use it for tracking, or in some cases, they handful of companies who are driven through budgets, or they are driven through funding specific, particularly universities, colleges, they are based, they usually run, whether based on grants or specifically for source funding from different sources. So they will have specific purpose against which the funds will be accumulated, and from where you will be tracking the information. So the whole purpose of these budgeting is to, most cases it is just tracking. So you will probably not do encumbrance accounting at all. Very few clients. I haven't seen any client doing encumbrance accounting to such an extent, because it adds up so much load on top of what you are already doing. As it is, finance people are stressed out, and on top of it, if you add in more complications, and most cases they would do the budget or the tracking outside the system. Okay, like you said, Santosh, if there is any unused fund can be shifted from one account to another account, right? So one particular account you did not budget so much fund, but this year you suddenly see a lot of sales related travel expenses. Maybe it has gone up a lot. Business has also uh, been good in from foreign countries, so you want to increase that a lot, right? You want to spend more, maybe on advertising, on interactions with your clients or things like that. So but you don't have enough funds because you didn't budget so much in this financial year, but you have funds for other accounts, so those you can then move, like you were saying. In those cases, either in the system, if you do it, budgeting decrease increase is the way out, and outside the system, of course, you can do it and then finally bring it in. Nowadays, in most of these scenarios, you have the uh, business finance or a typical department which tracks all these expenses, and they heavily track these expenses, let me put it that way, to ensure that people stick within their numbers. Okay, and only then they will be able to update and move forward based on business finance approval. So those approvals may be happening outside the system. They may be tracking through Excel sheets that they have, and their Excel sheets are amazing. If you look at it, one can easily see there's too lots and lots of scenarios, different things, different sources, why that data has come in, what are the parameters based on which those data has been derived. So the data for those budgeting purpose may be coming from your financial system, financial reports of the previous year, or trial balance or balance sheet, the profit and loss accounts and stuff like that. So those may be the sources. Ultimately, it is the transactions which will be the sources. So based on that, it will derive the budget and move it forward. Okay. So this was the budgetary control. Now we saw this first, and then we went back and did the looked at the setup. Right, in real scenario, it is actually the other way around. You would first do the setup and then come back here and look at the budgetary control.
Oh, I'm surprised why the budget have been included in GL.
Where would you put it?
No, just surprised. Admittedly a dumb question, but I'm just surprised.
No, actually, it's it falls across modules, right? It cuts
Okay,
across multiple modules.
okay.
You have the sources,
Mhm.
the sources where these budgets are consumed. They are in different modules. Like you have purchasing, you have payables. All of those are your sources where your budget is being consumed. So that is why they have you know kept it somewhere between general accounting and a separate budgetary control. Eventually, they might decide to move everything into a budgetary control and then have a separate, totally different, you know, sort of offering for budgetary control based on the industry demands.
Saurabh, I want to ask one more question. I
Yeah.
just want to understand the basics of accounting, which is a good one uh, to try to get into the basics of accounting. Because sometimes,
Basics.
yeah,
See, I can
which,
share with you one document. I'll just
okay,
show you that. This one is also taken from internet only. You can go
okay,
to that site and download it, or I can send you this document. Either way, I'll just find it and share it.
sure. Also, can you help us, whenever you know, about to complete a module or whatever,
Hmm.
just can you skim through all the challenges you might have faced in your real time, that will
Okay.
have,
Yes, we can do.
probably, yeah, that will add a more value to that
Correct.
because everything is in, we are trying to, visualize whatever you say that.
Hmm.
Okay. And also, I know you have been doing that, like, creating in a, whatever the supplier or invoice or whatever. But at the end of the each module, for example, then we, because since general ledger is the mother of all the things, right? So whenever we complete a module, we just try to do a small integration with that. Like we have done the payables and ledger, we did as soon as we did the invoice creation, we created accounting lines, right? But that was at the subledger level. So the same invoice should have been seen in the, when we post at the primary ledger level, how it will be seen. Okay. So when we do the receivables, then we can make use of payables, receivables, and general ledger, something like that, so that we get a clear integration picture. And
For
what are the
payables,
challenges?
we saw it in GL, huh?
Yes.
Yes, like that. No, that
Mm,
that's what we try to do, because that is where the integration really comes in. If you look at that
correct.
journal rule set also for the subledger accounting, over there, once you generate a subledger and then you try to transfer it, you will see the entire path.
Yeah, because that part was pending last time when we created a rules and all,
Yeah.
how it comes from the payables, subledger.
Oh, you didn't create any. Oh, I was under the understanding that you create that and then you run that, because we stopped at the running step, saying
Yeah.
that we can enter the transaction and then run it. Okay. If you
So if it's, yeah,
in this current instance, do you have that setup already?
no,
Okay. Then because I think this has been washed out. So
yeah,
the prior setup. So we'll have to
and
do that
also
setup and do it.
in the next class, we just go through what are the topics we have covered till now.
Okay, we can do that. This is the document I was talking about. Are you able to see my screen?
Yes, the basics of accounting. You're trying to open a
Basics,
PDF.
yeah, accounting principles. So this is just one chapter. This is taken from some website only, where they were talking about accounting, and I'll just open it and walk you through. Whichever site you go, plus minus, some of them have some very colorful PPTs talking about golden rules and all that stuff. But more or less, the content is similar. So you see, this starts with basics. What are the
Hmm.
different terminologies that are used? What is capital, liability, revenue, sundry debtors, creditors? Then what is the accounting cycle? And transactions, journals, balance sheet opening, closing, profit and loss account. They have talked about the different books that are generated. And then what are the accounting assumptions based on which they have come up with the golden rules of accounting: cash or receipt basis, accrual basis, hybrid, and then the classification of accounts: personal, impersonal, and the real accounts, real and nominal. So based on this, what are the golden rules? So this is the rules of debit and credit which has been explained. Personal account, real account, nominal account. And then they have given you certain examples that, Mr. A commenced business with cash 70,000. So this is the transaction he did, based on which an accounting entry has been generated. Explanation, that is the journal description. You can say business commenced with cash. Usually in traditional accounting, they used to start it with the word saying being business commenced with cash rupees 70,000. So what are the accounts involved? Cash and capital. Cash is an asset. Capital is the personal account. This is increasing. So you have this cash is the real account. Capital is the personal account. So when it is real account, what is the rule says? Debit what comes in, credit what goes out. So what has come in? Cash has come in. So cash account debit comes in. So that will be debited to capital. Personal account. So whoever has given. So your journal would accordingly be in this way. Cash account debit to capital. So you have debit and capital. Debit and credit. Are you following?
Yes, yes.
Okay. So this is the basics that they are talking about. From these journal entries, they would generate what we call as the different books. Okay. One of the important books is your trial balance. Trial balance is basically a detailed account-wise debit, credit, total, and the trial balance must match. That's the expectations. And these are the, when we say final accounts, these are the different books of account that you can generate. Manufacturing account, trading account, profit and loss account, balance sheet account. So this is the trial balance that there, it is a list of names of the accounts and the balances in each account as of a particular date. Then this is the manufacturing account, which is basically all costs attributed at the if you look at manufacturing means factory. So all things that are at the factory level, those expenses are included in the manufacturing account. And then you have the profit and loss. Trading account is in case of a company that doesn't have a manufacturing unit. So in that case, only the expenses for your trading are included. So anything which is not directly related to your goods, so trading or your manufacturing account handles expenses directly related to your goods. Profit and loss is what is after removing any insurance, selling expenses, administration expenses, bad debts, rent, depreciation, all these have to be accounted for. That is what you get from your profit and loss. So profit and loss typically debit and credit. One side is credit, one side is debit. So debit is all your expenses and this side is all your income. And then you have your balance sheet. If you do a search for basics of accounting, you can get that, or I can send you this. Do you think this will be useful? Is this what you are looking for?
Yeah.
This is very short. If you want more details, you can internet is obviously the best source, but too much of information. Okay. Any other questions?
No, sir.
Okay. So next class, if you can, have you guys finished that practice about the creating the journal rule sets?
No, I'm going to do it today.
Okay. If you do it, just leave it, and then after you do it, you go and enter one invoice, or because they might refresh it tomorrow or day after, whenever, but I don't think immediately there is a plan for refresh, because those are usually done during the weekends. But once you do it, you may generate that invoice and see it yourself, or we'll see it on Wednesday, because if you finish that,
Actually,
then
I
we
was
can use.
practicing at my company because we have one instance which will
Oh,
not get refreshed at
oh,
all.
then it's good.
Unfortunately,
Then it's good.
unfortunately, there are some issues. There are some, legal entity issues. I believe they're working on it, Oracle. There
Oh,
is a ticket. Otherwise, I would have started continuing that.
oh, oh,
Probably I may be losing the data. They're going to refresh.
oh,
Eh,
oh.
Yeah,
Whenever they have problems, they find the easiest way is to do a refresh.
correct. Because this has been going from past 12 days or 13 days.
Oh,
So they're not able, Oracle is not able to find the solution. And for some of the modules, the legal entity is not able to, they are not able to access effectively.
oh.
There's some issues going on. I
And
don't know the
it's in
details about that.
production.
No, it's a test instance.
Test. Okay.
We have both because we have one permanent test instance as well as, the vision instance what you have, right? Every week they refresh. We have both.
Correct.
So we
Okay.
will not normally will not give for all the developers the access of the test instance. No,
Okay.
only for those who are in the projects we give.
Correct.
For the people who want to practice, will not give access. We'll give the
Uh,
vision, the weekly, yeah, vision instance.
which organization you are in?
I work for a company called
Called Saber.
Cyber, CIBER,
Oh,
CIBER.
CIBER. SI or CI?
No,
CI.
CI.
CI. They are into consulting, is it?
Yes,
Okay. They are a global organization, right?
yes.
So how are things now after the COVID?
They're not that good, sort of. So, you know, there's always a
Let me stop
challenging,
recording.